Let's get going. July 2nd, second day of the week, second day of the month, second day of the quarter. Something just interesting. We're going to get into market profile, and I did a little cute, even though he doesn't spell his name M-A-R-K. It's M-A-R-C, but I broke it up, did a little market profile. So Marc from the group is going to talk a little profile. He's been coming in the room and doing a brief profile preview as to what profilers might be looking at to start the session and to go through the session. And I think it's important, and we'll talk about that. But just an update as to what's going on week to week. We know the drivers are U.S.-China trade and Iran, if that ever bubbles back up. But we're going to get earnings in a week or two for the second quarter. We're going to get some second quarter numbers. We got unemployment on Friday. And it's a short week with 4th of July, but then they release the jobs number on Friday at 7:30 Central. So for trading room guys, that room will be open. Generally, I wouldn't trade on the 5th of July if the number wasn't coming out, but it'll be open a little bit early for that release. But what just happened recently in the last 30, 45 minutes, there was an event that Pence's event in New Hampshire was canceled due to some emergency back in Washington. And then I think at the same time, the House is suing for Trump's financial statements, and that bled into why Pence was going back, and the market broke. And then they released the all clear, and they rallied about 4 points or something that there's no emergency. They're going to reschedule it. So the market's just banging back and forth between value, which coincidentally enough is a lot of what Marc's going to talk about. But I know a lot of people in here are proficient at profile. Some aren't. I could get by with it, but I'm really working on understanding what's popular for profilers and then to see where they're stuck. Because if it's a popular bullish setup and they're wrong, that's bearish. And we get into that as we go through it, not just today, but the ongoing room sessions every morning. Let me bring Marc in and make him a panelist. Promote to panelist. He'll be able to share his screen. Marc, you should see a toolbar pop up. There you go.
So I've been promoted, huh?
You're promoted. You're a panelist. I could demote you back to attendee just like that, though.
First time in years. All right. Let's see. Share. Yes. Let's see if I can get to 1, 2, 3. 3.
Before you start, tell me when you got things set.
Share. All right. Can you see my profile screen?
Yeah, I do.
Okay.
Wait 1 second. I got to move it to another screen for me. All right. That looks good. Now, before you start, let me just give people a little background on you. You were financial analyst at a hedge fund for how long?
No, I was an institutional equity salesman for an investment bank, focused on coming up with stock ideas for portfolio managers. And I was on an institutional desk. So it's called sales and trading. And there's say 30 research analysts that work at the firm. My job was to figure out which analysts knew what they were talking about, which stock ideas that they talked about were good, so I could present those ideas to my clients. My clients were people like George Soros, big hedge funds like that, or big mutual funds like Fidelity. They weren't my client, but I at one point worked with the mutual funds at JP Morgan. So my job was just to basically talk to those portfolio managers and give them information, insights, stock ideas, so they could make money with those ideas.
Why'd you stop? It's not rewarding, or not necessarily not
Well,
rewarding.
I did it for 10 years. And, after a while, you kind of burn out. And, and it was also during a period of time where the market slowed down. We started to make less money. I had done well, not only with the job, but also in my own personal trading in stocks. And I wanted to move from New York, and I moved to Colorado. Bought a place here, and
You've been there ever since.
yeah. And then I took a job with another firm. They put me up in an office out here that went on for about a year and a half, and then that firm decided to wind down their whole operation.
So when did you get into trading? This kind of trading.
Futures about 2 years ago.
And when did you start profiling or learning about profiling?
Maybe 2 years isn't enough time. More like 3 years.
Did you start learning profiling as soon as you got into futures?
I started learning profiling from Jim Dalton. And Jim Dalton's one of the grandfathers of profile. He wrote a book with another guy. And I want to give you the name of the guy. Stoudemire was the main guy.
Right.
And Dalton funded Stoudemire's first book on profile. He actually gave him the money to write it.
I didn't know that. I remember reading Stoudemire's book. It's a big, fat, thick book, and I was excited. I started my trading career in the pit, and I was excited because I was understanding this. And then as I was reading through it, I began to think, I don't know. So
how am I going to make use of this thing? Right.
Yeah, I was excited in the first third and then disappointed in the middle third, never finished the last third.
Right. So I took a few of Dalton's classes. He has these intensives. And so I learned profiling from him. But what I quickly realized was that, it just doesn't help you with the decision-making process. It gives you a way to frame context. It gives you a way to, gather a lot of price information and put it in a format. But what it doesn't do is give you ways to trade it.
Right.
You could sit there and do all the analysis with the profile.
He even says that and admits it, right, Dalton?
Yeah, he admits it. I mean, he doesn't even trade futures, by the way. He trades options.
Let me ask you something about Dalton. He's giving me a shout out. Was that you that told me that?
Yeah. Or no, I didn't tell you that. Somebody, I think Tom.
No, Tom didn't tell me that.
Or
Someone
maybe?
told me that, but you might have heard me say it.
I'm not sure.
Someone said he mentioned me about, I don't know. Either way, he's one of the bigger names with.
Yeah, he's a big name. So I learned a profile from him. Okay. And then there's a guy who's been in the room here, Merritt Black over at SMB, who has done a lot of work on profiling. Jim Dalton's written 2 books. Merritt Black has done a lot of, I'm sure he's taken Dalton's class. But he's got a lot of his own original concepts and ideas around how to use profile. And he tried to kind of take Dalton to the next step and come up with setups and stuff like that around how you could use it more effectively. So those are 2 good guys to learn from. And I learned from both of them. So
How about Kepler?
Yeah, Kepler. I don't know about Kepler. I like Kepler, but I didn't really.
Dr. Evil.
Yeah, Doctor. But I didn't really. That's not where I learned.
Right.
So those 2 guys. I want to credit them because anything I say is not original. I learned it.
No, that's good. That's good. Is this a similar profile chart that Merritt uses?
Yeah, this would be something similar to what anyone uses. Okay, it's not just Merritt.
Right.
It could be Jim Dalton. It could be anyone.
Yeah, but he did something when he came on to do one of these sessions with his Sierra profile.
Yeah, he uses Sierra chart. So,
yeah, but what was the thing that he did that was unique in the profile? Did he combine a bunch of letters or something?
Yeah, I'll get into it
Okay,
once we
good. Well,
start.
I'll let you start. I think that's enough. People get a nice background of Mark. He's been with us for over a year. Some of you guys got to meet him at the Chicago event 2 summers ago, and I actually didn't like him until I met him, and I really didn't like him. No, but it all worked out, and I
Right.
liked him more after him. That's what the power of face to face is that people don't get. Is you get an impression about someone, you meet them, and maybe it's different. So anyway, take it away, Mark, and then I'll ask
So,
questions.
okay, yeah, that'd be great.
Could you
So,
wait 1 second? Could you see people's questions by chance?
uh,
Don't
no.
worry, I'll relay them to you.
So what I'm trying to do is basically, fine tune my process in terms of my development from, using profile and coming up with analysis and then being able to trade the analysis in a usable format and then manage the trade. I got this trade the news in the back of my, okay. So just with the background of why I'm even doing this is to help the community and to fine tune my process. So twofold, help others and fine tune the process so I start using it more effectively. In terms of profile, let me just reset everything. What I try to do in the morning is frame a bias. Okay, Anthony talks about a bias. What's everybody's bias in the morning? Well, if you just looked at a chart, you could come up with some kind of bias. You could say, are we trading above previous day's high or previous day's low? But what I try to do is look at balance areas and where we have held above and where we have held below. So like in the case of the ES, you can see, and I pointed this out this morning, June 20th through June 24th. You've got these 3 days from 2960 down to 2952. And if you merge each day, you come up with a value area, basically where price spent time. That's all a value area is. Let me reset it again. So like, for example, if you just took today, this blue area, that's today's value area. All that is a price, a time at a TPO, time price opportunity. How much time we spent at a particular price. And each letter is a half-hour period. So if I put separate the letters out, oh man, my screen just went blank. That's not good. Hang on, there we go. If you separate the letters out, each letter is a half-hour time period. So now let me reset again. Okay. So all this from this blue area, okay, is how much price traded within a period of time. And it gives you some kind of average calculation and it comes up with these levels. And so just in a nutshell, this is today, but what I try to do is come up with areas of balance and then figure out where we're trading relative to those areas. I don't know what's wrong with my screen here. I feel like Steam Barger falling out of his chair. You there, Anthony?
I'm here. I just was down the hall getting some water and listening to you. What happened? Your screen went out again? Hello? Do you guys hear me? I don't hear you, Mark.
Hey, can you hear me?
Yeah, now I hear you.
All right, something happened.
Did your screen go black or
Yeah, my screen went black.
is it back?
Yeah, it's back.
All right. You could see where you share, right?
Yeah.
That's
Oh,
right.
I'm not sharing, or I am sharing. Share. Let me share.
Yeah. Take your time. That's right.
Screen.
It's that Colorado thin air. It interferes with the internet.
Indeed. Share. All right. Can you see the pro? Man,
No, it's black.
yeah, I don't know what's going
Well,
on with my
now it's
internet.
flash. Is it flashing on your end, Mark?
Yeah.
Your machine?
Yeah. It
Well,
must be
what?
something.
Maybe try a different monitor. You have, or is this a laptop?
Oh, it's a monitor.
Maybe go to drag. Do you have multiple monitors?
Yeah.
Why don't you see if you drag it to another monitor and share that monitor? If not, I could pull up here.
Is
I
it
see it
share?
now. Yeah,
Okay.
looks good.
All right. So the gist of what I do in the morning, just let me start there. Okay. Is I try to come up with a bias. And what I've learned is that markets work in terms of balance and imbalance. Okay. So in the case of these 3 days down below here, 625, 626, 627, these are three individual days. This is just a way to summarize all the days trades that took place. And what I do is I combine these days that are overlapping. If they're not overlapping, I don't combine them. And I look to see, for example, let's just look at the 28th. If you look at the 3 days before the 28th, I combined them. You look at the 28th and you look at where price traded. You know, we opened right here at 39. We traded down to this, what I call 3 days of combined value or a composite value area. And we rejected it or we held above it. You know, so these 3 days were respected. And what the profile tells you on this day, which is the 28th, is that we held above those 3 days of value and traded all the way, you know, up into here, which if you look where we traded to is these 3 days of value. If you combine these 3 days, okay, we traded into that other balance area. So what I'm trying to do is identify these composite areas of balance where we had multiple days of overlapping activity. And I'm trying to basically say, look, these areas are support or resistance. So in the case of, you know, the 25th, this is a 3-day composite. It served as support for the trading day of the 28th, and we just held above it. And in the case of once we closed, I believe that was on Friday, if I'm not mistaken, we accepted back into this 3 days of value or composite. It's called a composite value area, CVA. So we closed in the middle of this 3-day balance, and then, you know, we know what happened on Monday. You know, it was a gap up day. But what happened was we rejected this composite value area and opened way the hell up there. And what do? We come down and we retested it, accepted back into this 3-day composite value area, and then now we're rejecting it again. And so the whole idea behind profile, the way I use it, is you're just looking to identify areas of support and resistance. And the way you do it is by combining multiple days of activity. And in the case of the most recent activity, you know, the most recent composite value area, 3 days, is right here. You know, the top of it is 61, the bottom of it is 51. And so if we're holding above that, that's bullish. And you can see today, we didn't get much below 61.25. You see it? Anthony? Can you hear me?
Yeah,
Hello?
I can hear you. It just takes me a while to find the mute button.
Okay.
It's in a different spot when someone else is sharing.
So what I'm trying to do is identify multiple days of activity to form support and resistance levels. Support and resistance levels. So if you look at, let me split this out again. Let me consolidate this a little. Okay. See these 3 days from the 20th to the 24th. If you combine all 3 days of activity, merge with prior profile, merge with prior profile, you come up with a composite value area of 61 down to 52, okay? If you look at today's action, and that's the most recent composite value area, we traded right down to it, to the top of it. You see an E period, 61.75, and rejected it. So I guess what I'm trying to say here is that what the profile can be used for and is good for is to find good levels, frame context and find good levels. And so that when you do reject a level, or when price comes down into a level like 61, you can then use other tools like order flow, like intermarket correlation, to qualify whether or not you want to be a buyer at 61. So step one is you identify these multiple days of overlapping activity. Here's another one, these three. I'm just going to combine those. So that's a 3-day composite value area. Did you hear that? Shots
Shots
fired.
heard at that airport. Yeah. That's why Pence got canceled.
Sounds like it. So step one, I look for these composite value area overlaps to identify levels. Then I look at previous value, like if it's just a standalone day. For example, let me reset this. Yesterday is just a standalone day. You know, there is no overlap. We're at an all-time high. I'm just looking to see, you know, what the value area of yesterday was, the high and the low. And today is an inside day. And you can see today's value area is 65 down to 70. So I go from basically multiple days to previous day to current day. And that's how I try to identify, you know, where price is balancing or out of balance. So today, right now, you know, if you wanted to look at it, okay, you've got these 3 days of value. So we're imbalanced up relative to the most recent 3-day composite, okay, because we're above 61 quarter. And we're in balance relative to yesterday. So, and then within today's session, we're at the lower end of balance. So what does that tell you? All it tells you is that if you're looking for a rotational kind of day, you'd be looking to fade the edges. Okay, so like yesterday, you could use yesterday's value area of 77 down to 60 and say, look, if we come up to 77s, I'm looking to fade that. And if we get down to 61, I'm looking to buy that. Within the current day, you know, you could get even more micro and say, hey, we've already established some activity. We've got one, you know, how many periods? 1, 2, 3, 4, 5, 6 periods. If we hold below 65, which is the value area low of today, I'm looking to either, you know, sell a breakout, or I look for a reversion trade back up into the current day value. So I try to go from more of a top-down approach, multiple days to previous day to the current day. and then you come up with your trade setups from there, which I can talk about. But for now, that's the gist of it.
All right. You mind
Now that I've thoroughly confused you.
No, that was good. You explained well. So, to me, I like the basics anyways. You can get into what letters mean and all that stuff in a book, but just what's important, what you glean from it. You're near Aspen. There's another guy in here from Colorado. Asked what part of Colorado you're from.
Carbondale, near
right.
Aspen. Yep.
Near Aspen. Another question is, why wouldn't you consider the middle of the 3 days labeled 620 as resistance since price closed in the middle of it?
That's an interesting question. What I would say about the middle of it, it's the, you see I have a yellow line here. It's the POC of the 3-day balance. So if you look at a POC, it's basically similar to VWAP. It's the number that the volume POC. Why wouldn't I consider that? What was the question again? Why wouldn't I consider that?
Why wouldn't you consider that resistance as price since price closed in the middle of it?
I mean, you can. What I would call it is balance. You know, you're balanced because you're in the middle of it. In other words,
like middle of a teeter-totter.
Yeah, if you're in the middle of something, it's not really support, it's not really resistance, it's just the middle. So, and what I found is that whenever I trade from the middle, that's where I get chopped up.
Well, it could go, it's like a mountain, it could go, or an egg on a rooftop, which sides are going to roll down. And but that's a good question. Are you looking at regular trading session only, or you split them, right? Or how
Yeah, I
do you do
split
that?
them. So like in the morning when I come in, I split it. So like if you look to the left here, this is the overnight session included. And what I do is the first half hour, I look at the overnight. I include the overnight. And then after the first half hour, I go to just the
So wait a
piddle.
second. On the chart on the left, the skinny profile's overnight and the short fat one's the day session?
No. Everything's overnight. Although I have it set. You can set it. You go to chart settings, and then you can either use an evening session or uncheck it, and that'll give you the day.
So this short fat profile is overnight included.
Yeah, this right here is overnight included. Like the blue would be, you know, the value including overnight.
Got it.
Is now this.
And then if you shrink this chart, what was the chart on the right?
So
minimize that. What's this one on the right? What's different
this
about
is
it?
day session only.
What is it?
Day session only.
Oh my God, it for each day.
Yeah.
I see. So we're still within yesterday's value.
Well, no, we're within yesterday's value, yes, and we're below current day value area low.
So Michael asks, can you show an example of out of balance?
So out of balance would be yesterday, where yesterday we opened up at 79, and the previous day was down here. Previous day's value was down here. The high was 43. So we opened out of balance yesterday. And then all we did was trade back down into this 3-day composite here from the 20th and then reject it. So yesterday was an out of balance opening coming, and then it was like a fade into
the overnight balance.
Well, yes, it was. You're right. It was like, see, that's the whole thing. It's a progression, right? What I do is I start with the 3-day, if I have one, or 2-day composite value area. Then I look at previous day, and then I look at the overnight.
Yeah.
And then you get into the current day.
Well, I tell you, yesterday helped me just going over the overnight that if we failed 68, I think it was 68. They hit it once, it worked. And my thought is the profilers look for it to work once and they try it the second time. And if it doesn't work the second time, you got profilers stuck long. And that's kind of what makes it drift from value area high to value area low, which is what it did yesterday.
Right. So you have, so
but right now would be bearish. Like someone's asking right now, is it bullish? No, now you're below today's value, right?
Right.
You're failing.
You're below today's value, but you see this 3-day from 620.
Right.
You're down here at support, this 2961. So you'd want to see if we can get accepted into that 3-day. Okay. And then if we hold below that 61 level and you get a pullback, you might be able to,
I see. So it's weak on today's, but obviously it's strong when you incorporate the last several sessions, and that's
right. When you incorporate like
long time frame all the time.
Right. There's support here at 61. That's why we're stalling. Right.
Hey, so no, right. I'm sorry. I thought you were done. I got another good question for you.
No, go ahead.
Why did you not include 628 in your consolidation of the 3 previous days as value area overlaps 625? Does that make sense, that question?
Yeah. So the reason, that's a good question. These 2 days overlap.
Yeah.
This day here, it's pretty good overlap. But
it's discretion. I would answer it this way. It's discretion. You could.
It is. It is. But it just fit together pretty well. Like when I merged these 3 days,
yeah,
it just seemed like the top of the value for the 3-day was the bottom of the value for this 1 day. And if you did it, you could do it. You'd have something like that, which is fine. But it is discretion.
When profilers look at a day, and this fits into the next question, just profilers, not Marc, profilers. And that's what's important about when you're talking about what you're using. Don't take it personal. And I'm not talking to you, Marc. I'm talking to everyone. Just say it's here. Profilers answer this question as what the profile community would answer. When a day opens out of balance like yesterday, what do you look for trade-wise based on the fact it opened so far out of balance? What do profilers look for on a day like yesterday?
Active shooter.
Probably some of this weakness. It's already weak. So it's
all to do with
an excuse, but active shooter situation.
So to answer that question, the first thing a profile looks for, is there any attempt to fill the gap? Okay, because here was Friday's high, 29.55 quarter. We opened all the way up at 79. So you've got a gap up situation. Typical profiling would be, is there any attempt to fill the gap to previous day high? And how strong is that attempt? And if there is no attempt, typically what profilers say is, go with the gap, go with the price movement higher. So, what I used yesterday was just like overnight value area high. And if we can't get above it, I'm thinking
they were trying to buy 68s second time, I think.
Yesterday.
Yeah.
Yeah. And if they can't, if there's really no press higher, I'm looking for the gap fill.
Hold on, I'm listening to news as it's dropping down. Hold on.
Okay.
All right.
So when you open way out of balance, like this person's asking, and you're asking, what do profilers do? They look for the gap fill. Is there going to be an attempt to fill the gap? And if the attempt is weak, then they're looking to go with.
I think they were looking for it to go down. It went up. So they were looking for it to go up. It went down.
Right. But I'm saying in general, like if you took a Dalton class, okay, His rule is go with all gaps that aren't filled relatively quickly, meaning go with the up action.
And yeah, no. So I don't dispute him, anyone's take or bias on how to read the profile. We want the profile to be read similarly, and then do the opposite when the read is wrong. And that's I've been trying to work on that for a while, and never really been able to hone in on it. And I think this is something that's going to help me help everyone just be able to get a profile preview every morning from Marc to look at it. Just say, hey, is there a popular profile opinion? And go against it now with it.
Well, you could say that too, though. Today, when I pointed out the value area high, it's like, that trade worked.
No, I know. I'm just saying when it not just go against it in the blind, go against it when they're stuck, when they're wrong.
Right.
That's my point.
Right. And it happens all the time.
Yeah.
Meaning what you're talking about. Like, and here's where they really nail people is you have these profile levels, okay? And when price isn't fully accepted into the area, guys try to like front run it. Like, for example, if we're at 77 and you're coming into value area high, they try to short it. And then what happens is, boom, they get wicked and it goes straight up. It's called a pick.
Wait a second. They try to sell established value area high, correct?
So, like, for example, say you want to sell, you're breaking into this yesterday's value, okay, just as a hypothetical. And price is coming from up here, from 87. Maybe I can use a pen or what is it? It's a mouse, a select. I don't know what this is.
It's on the toolbar. It's on. You gotta. There's a
draw.
Yeah.
So you're coming. No, it didn't work. Select. You have to what? Select it or draw. Oh, here it is.
It's a Colorado Air again.
I'm telling you, man. All right, there it is. So price is coming down from up here, into this area. Okay. What happens is people want to get short immediately. And then, boom, it comes straight out of the area. And they use this level, 78, to say, hey, we're coming into value. Let's get short. But what about all the people that have bought it, and the bigger guys?
That's crazy. Yeah. It's like they're reaching. They should have
right.
been short.
Right. So you'd already come down from up here, and then it comes into this area, a popular value area.
Yeah.
And then boom.
You got to anticipate it's going to go down to the value area high. Cover your short, not think of getting short. That's
right.
This is profile thought.
Right.
It's just, well, it's late, like most people are.
In this case, 78 or 76 or whatever it is support as you're coming into it. That's the way you got to look at it. Until you accept into the area, you get your pullback, then you could try a short. But where people get in trouble with using these value areas is they think, oh, we just came into it, so let's get short. No. There's people that play against that, like you're talking about, Anthony, and they know people are going to try to get short in here, and boom, they get picked.
Well, it goes back to, an event I did, what was it, last week or 2 weeks ago about order flow. It's like, with the fifth graders think that it's bullish after it was bullish, right?
Right.
You can't, but that's good. This is what part of, I want to get popular profile setups. And then,
so let me talk about a few setups, okay? A few quick setups, okay?
Anyway, before you go into that, some of the things that people are typing in with what's dropping down the wires, this isn't going to help people watching this on recording, but now the what was it? Who said this?
The Pence thing.
Sub fired, 14 killed in the Arctic. So I don't know. I think the market's a little wary about what's coming down. What started with that Pence thing and then killing 14 in the Arctic. So we'll see.
Yeah, another just basic thing here. Yesterday's low at 29.55.75 is a poor low. You have multiple
When you say poor low, that means it's going to get retested, right?
yeah.
Okay.
It's an incomplete auction.
Incomplete auction,
Yeah.
like unfinished business.
Yeah. You can have it on a footprint, you can have it on a profile.
And then I replace that with magnet if it's
Right.
true. Poor low is a magnet.
Right. They want to clean this up. They want to
Clean it
clean
up.
this 55.75 low up, get excess.
Got to find the other side.
Yeah. And here's the other quick concept that's very important. Excess and balance. Okay, those are the two most important concepts Dalton talks about. Excess is when you have single prints. Okay, so in the case of yesterday, let's use a period high, you have 1, 2, 3, 4, 5, 1, 2, 3, 4 single prints. That would be decent excess, meaning we made a high at 82 quarter, and then price moved quickly away from it and
Right.
generated single prints. Okay, down here, the low of yesterday, we have no excess. You have 1, 2, 3 periods of sideways action, incomplete. Yesterday's high is complete. Yesterday's low is not.
So it's like a blow off top. There wasn't a
Yeah,
blow off bottom
right.
to
And
really
so
shake
usually
out the
these,
longs.
right, when these non-blow off bottoms don't occur, meaning you get this incomplete auction, we're
I
going to
get it. Yeah.
revisit it at some point, which
Excess.
is
What
what
do
we're
they
doing.
call it?
What's that?
What do they call it? Excess.
This is not excess down at 55. Up above it is
Yeah.
82. Excess high. This is a poor low. Poor low is an incomplete auction.
I used to have excess girls follow me around when I was at the bar.
Excess high would be a completed auction.
All right. I like,
And so like all we're doing here in general is figuring out, you know, what value is. Like, you're buying a house, you're buying a car, like you've used as an example. Up here at 82, people said the house is too expensive and they sold it fast.
right.
We opened up at 79, went up here, and then they sold it off. They're like, no, we're not paying these prices.
That's
So we have an excess high with single prints
right.
that defines an excess high, and we trade it all the way down.
Hey, that actually happened in housing, and they pushed a lot of people in late 06, early 07 when the true top of the market was early, like January 07. So when they pulled subprime, February, March. So, but they had a huge glut. You know what I mean?
Yeah,
What you're saying. Get everybody stuck at the high, and then there's no more buyers.
right. And so they're all stuck, so they all sell fast. They all want to get out at the same time. And that's how you get these single prints. Everyone's rushing out the door. Until we get down here at 55.75, and people aren't so sure.
Yeah, they're twiddling their thumbs.
Yeah. It's like, it's yesterday's high, it's Friday's high, right, in the runoff. And they're like, maybe I'll sell it, maybe I won't. And then you get late sellers. You get guys that say, you know what, I know we're going to press into Friday's range and get in there, so I'm going to just sell it.
To me, there's too many people when it plays near a low that have gotten time to buy it if it spends that much time. Therefore, there's a lot of longs. They didn't shake out longs like they would if they snapped it lower, capitulate lower. So that's why there would be a tendency to move back to a poor low. That's the rationale. That's the logic. Too many longs. What do you do when you too many longs? You got to shake them out. Where do you shake them out? Shake them out to where they got long, or that's why it's a magnet and a low that's probably going to be tested / taken out. So good work by Dalton.
Yeah, so you got this like 3-period low.
I explained it better than Dalton did, though, as to the why.
Not bad.
Thank you.
So everyone's a seller, not everyone. People sold it fast up here at the high, and down here, the shorts are pressing. They're trying to press this thing lower and get it into Friday's range.
Mm-hmm.
And it's not working. And then guys that got short from up here are like, all right, you suckers, let me cover some. And then,
Yeah. I mean, that is fine to think of it that way. I
maybe,
would,
maybe
but
not.
I would just,
That's
you
not a
know,
good example. I'm just
yeah.
saying people are
No, that's
getting
fine.
short
It's
here.
not bad. I just would
They're
keep it
just
simpler.
getting short here, and everyone's short here.
That's
Okay.
right.
And so, since everyone's short here and the bigger guys are trying to press it, it sometimes doesn't go, and you get these relief rallies. They call it an inventory adjustment, and we rally up. And if I split this out, you'll see it. And this L period rally, and then M. We closed up here. So we left this low here is incomplete, and so we're going to go back and revisit it.
Well, here's the this is the story of it, and I think that people might think, and if they're not thinking this way, you should think this way and say, well, at any point, why isn't there? How do you know there's a lot of longs? There'll be a lot of shorts, and if there's a lot of longs, then why wouldn't there be sellers that push it lower and everything else? Here's the context: the market went from where? Where are they at on the map? They broke, and they broke a lot. So yeah, while it might continue to make lower lows when it's at 55, 56 yesterday, you know where it came from. So you know that the people who are short got profit into it from above. They're buyers and tend to say, let me just get out. That's buying. You got people who get short late, they're buyers. Now you've got people who are long, no doubt, and they're getting long and they're turning into sellers. They tend to be down there at better prices because it just is going down there and building some value. And I think that you don't have to make the decision as to whether or not it's a poor low when it's down there necessarily, in a profile sense, as it moved away from it. And then you recognize, hey, wait a second, that's a poor low. So that's a magnet. I think we're going to go back down there. So on a day like today, you'd play it from the short side. Why? Because you got a poor low from yesterday and we're
Right.
above it.
Right.
So any kind of B2B transitions, any kind of stuck long inventory or order flow, downside in correlation, anything that could qualify executing on the short side, you're playing it just from the short side, maybe all session.
Yeah.
Negative news coming down the wire, whatever. Why? Because ultimately you got that magnet that's created your bias. There's some
100%.
there's some good questions, which means people are
Anthony, you
interested.
getting it? You got it, man.
So let me ask a couple more because there's a lot of them here. When a day opens, I said that one. In the S&Ps, usually have a 3-day balance, then tends to initiate move up or down on profile. Are you asking that, Raj, or telling me that? Let me ask you that. Does the ES usually have 3-day balance and then makes a move up or down?
I think it just depends on the market we're in.
Yeah, I
You
agree.
know,
Do you use Dalton's
it's
day types?
you know, I sort of do. Like open and drive. He's got a couple different ones: open drive, or open test and drive. So yes, somewhat.
When does
But
he determine his day?
I just look at what the market's telling me. I'm not gonna like. I don't like. I could like put it to you this way. It's like it's one of those, right? You can see it when
Yeah.
it's happening. It's like, okay, this is an open and drive. Yeah, that's a Dalton day type.
It
You
might be
open
too
it,
late to play it. I get it. Is his day type determined when? After the first half hour? I mean,
hell no. All it does is like, what kind of day is it going to be? Usually the first half hour will define a day, but it could be defined in the first 5 minutes.
so
I
an
mean, like,
opening drive higher would be they open, they run it higher.
yeah. And the
Opening drive
opening
low is
print, and then the opening print is really your buy point,
well,
like test
yeah,
it.
that's
Like
tough.
for example, yeah. So like if it's an open and drive, I'm just using the opening print as the point I want to buy it on a test.
Well, here, what do you do with an opening drive? Generally, it's too late because it's already an opening drive. But if it's a gap open higher and they drive higher, generally it's a grind higher for the rest of the session because you never gave people short a chance to get out from the previous session. You gapped higher, you open up, and you go up. You gave shorts no chance, and so you probably got more buyers than sellers in this balance, in this not balance, but in this market, which will generally keep the upside trend intact. So an opening drive on top of a gap open higher would tend to have a pretty decent upside bias for most of that session. Here's another question.
But to answer his first question, yes, I do use some of these day types.
What does accept into area mean?
Okay. So like in that other example where I said we didn't have acceptance and they got picked,
It's one of your girlfriends.
yeah, it is actually. Let's see here. How do I do this? Annotate? Is that going to work?
Yeah, there you go. That's it.
All right.
That'll open up to a lot of another little toolbar.
Where's my tools? Let's see. Don't be a tool. Annotate.
Annotate, and there's tools that you
what should I use?
Use the pen. If
pen?
you drop down that window, it's the marker upper left.
The mouse or the?
No, it's not the mouse. You got to hit the
format.
I can't remember what comes down to drawing.
Draw. Oh, I got you. Draw. And then
the one with the line. There's a thick line, thin line,
yeah.
box, shades, circles.
Yeah. Use the line. All right. Let me try this. Okay. He asked me what's acceptance, right? So this is yesterday's value area high, 78. If you start moving into this area, okay, the question becomes, are we accepting into this previous day's value? So previous day's value is 78, that's the high of it, and the low of it is 60. You can see it on the profile here. This green line I drew is price coming into the area. Acceptance depends on the market, but like for me, acceptance would be like a full rotation. So an average rotation size in the ES would be anywhere from what, three points. So if we got like 4 points into here, I'm calling that acceptance. So right there is acceptance. That's your pullback, and that would be your flush. So
does Dalton have any hard and fast rules as to, all right, it's accepted inside yesterday's value? You could be bearish.
And to be honest, I learned more about acceptance from Merritt Black than I did from Dalton. Yeah. And he talks a lot about it. It's like if you're accepted, until you're accepted into an area, that area is not good to trade from. Unless you're just a breakout trader and you have some other reason to be selling it as we come into the area. Maybe there's news, maybe there's something. But in general, acceptance is you push into the area, call it, by a reasonable amount, and then you pull back and go. So like the line I drew, I would consider acceptance.
All right, next
vague
question.
Though.
No, I think that's, you have to be, the first thing is know where that area that's important. And then you could say, you think it's accepted.
Yeah. But just because it's accepted doesn't mean you should trade it.
Yeah.
Meaning it can be accepted, but then if you're getting short down here, you're subjecting yourself to a whipsaw.
Right.
And then it pulls back and you're like, well, we were accepted. You told me we were accepted. Yeah, we are. But guess what? There are other people that are already short. And so you want to wait for a pullback and then you get the turn back down.
She only accepted you because you bought her a couple drinks. Now
yeah, they accepted you, and then the next guy came along. But
then I came along.
Right. But the point being is that you get accepted, at least the way I trade. Okay, you get accepted, you get a pullback, and then on the turn, you're looking for the flush.
You got to find location. It's always comes back down to that.
But the problem with most people, and I'm guilty of it, is that they look at this acceptance and they're getting short at this line here.
No, right. You got no.
But the problem with that is that that's also the VPOC of the other of
terrible. Yeah, terrible.
Right. So then what happens is like the people that already got short, it pushed it in here, start to cover. And so what you want to do is wait for that to happen and then get the turn. And this is called a return pullback. Like you return into the area, you pull back to the high of the value area of yesterday, and then boom, you flush it. I mean, in a perfect world. And up here at 78, what are you looking for? You're looking for absorption. You're looking for, you know, the turn. You're looking for sell imbalances on the footprint, you know, on the turn here at 78. You know, stuff that Anthony teaches us, right? Here you're going to have aggressive sellers coming in, pushing it into the area. Here you're going to have some buying, but you want that buying to be weak buying, meaning not real aggressive. And then when it gets up to the value area high of yesterday, boom, you get sellers coming in aggressive. And then you get the flush.
Another good question by Stan. Stan the man says, when you use market profile separating the ABCs in the separate columns, wouldn't you get more out of it by seeing the rotations? Thought the same thing, Stan, as once you did that, because you did it.
Separate it?
Yeah, give it a separation. I like that.
Let's see.
It's the same thing I thought of. Maybe after he mentioned it, then you did it, coincidentally.
Okay, so here's the separation.
Yeah. So when he mentioned this, and then you did it by explaining something else. So this shows rotation.
Right.
Might help with the acceptance question.
Let me erase this.
How long and how deep do you spend in the previous day's value?
All these lines are kind of, I'm going to erase some of these lines because they're just.
Right now, we're still essentially inside yesterday's value area, correct?
Yep.
And now profilers might sell this 64 even area, the bottom of today's value.
Hang on. Yeah, so 64. Yeah. As a breakout.
So if I seen something compelling to take a shot short, fine. But if I seen it drive quickly through 64, I'd buy a pullback to 64. Like then I think that these guys are stuck. So if they flash through 64, I think that you pick off a lot of profile shorts.
You could say, okay, we're going to just, I mean, there's a couple ways. You could wick 64, sorry, and then sell down. Or, you know, there's going to be stops right above 64. So chances are we're going to trade through it, you know, if we wick it. But it is support. All right, so to answer the question, wouldn't it help you?
Hey, let me request your remote control. I want to show you something. Just hit yes. I'm going to take over your mouse.
Oh, shit.
I can't do it. There we go.
All right.
All right. Do I have it?
Yeah.
Oh, I was hoping to get a drawing tool, though. Shoot. I was hoping to see it so I could set you up with it. Could you take the mouse and give me the one, not the line, but it's a pen.
So
in that same area where you selected the line, could you select the pen? Annotate?
I can't. Annotate, then I want to go to draw, and then the pen.
Yeah. Tell me when you got it.
I got it.
All right. All right. Do I have the mouse?
No. I don't know, do you?
All right, let me take it again. Let me request it again. Hold on. Oh, no, I do have it. All right. Do I have it?
Yeah. There you go.
Oh, that's the line, though. Isn't there a draw?
I thought that was the. All right. Hang on.
That's just the line. The drawing tool.
Annotate.
Yeah.
Draw. And then what?
Isn't there a pen or there's a top left? Select.
All right. Let's see. All right. That should be it. Yeah, there it is.
There we go. All right. So now the premise of like understanding profile, here's 64 over here. And then here's the bottom of this blue balance. This is the balance from today. This is the balance in here from yesterday that was built. All right. So they come in here. Did they?
Let me combine it.
Hold on. No, I thought it was about Russia. What were you saying?
I was going to combine it again. It's easy to see when you combine it. Go ahead.
Okay.
Do you have the
I'll
pen
take
still or no? No more
No.
pen.
Go
Let me
back to the pen.
annotate. Draw. All right, there you go.
All right. So in this case, the market's moved outside today's value. All right. So the question is, do profilers now say they didn't sell it, but they see it leave value from today? So on a pullback to 64, is it a popular profile setup to get short in or around 64? Forget about qualifying it. Forget about anything else. Just will profilers look to get short in the 64 even area, Mark?
Yes.
Okay. So if it comes into here, some get filled, some don't, and it goes down, great. God bless them. They're going to have some winners once in a while.
Which it just did.
Which it did. Yeah. Did it get to 64 though? It was like a
But it
point
didn't
shot.
get all the way up there, but it got 63.
And that's another problem with the profile is the
Doesn't
setup
come always go right to the level, right?
Right. You can't just leave an offer up there for any strategy, get filled, and then it goes. So the point is, when you get, and let me go over here to a drop. When
I
you
got to
get a
shut this
market,
straight the news off. It's killing me. Go ahead.
well, you just drew a bunch of things.
Sorry. You want me to erase everything?
Yeah, erase everything. Give me back the pen.
All right, hang on. How do you do this? Annotate. How do I erase? Shit.
I think it's on the right side. It says there's a drop down. It says erase all. Can't remember what the header is. Just give me the pen back. That's fine.
All right, take the pen.
All right. Now let's come down here to lower right of the screen. If you get the market to come down and rally up to a certain area, instead of you thinking of getting short, assume if there's a popular profile setup to get short, that people are getting short. And if it goes down, fine. If it shoots through them, not only did it shoot through a price, it shot through a price that might have stuck a lot of shorts. Now you got the baby bird story. You got subsequent old, resistance, new support, or just new support. Now you've got a thin spot with some more validity behind it because the thin spot happened where you got a lot of popular profiler short. And now that's the spin on profile that would make it more compelling. Not using it as others use it, using it as others are using it after they're wrong. And the after they're wrong is important. That's things I've been wanting to work on. I shouldn't say trying to work on, wanting to work on for a while now. When anytime I would hear profile, I'm like, I like to understand profile. I'd like to understand when people are wrong in a profile trade and it's popular. And that's what's important. All right, I'm going to give up my controls here.
Eraser. Erase.
Yeah, erase and then erase all drawings or something.
I don't know why I'm on the eraser. It's not erasing, but
don't go to eraser. There's something on the right. It's a drop down menu. Go to all the buttons and one will drop down and says erase all on the drawing tool bar.
Okay.
The same bar you selected. And while you're doing that, another question. Would you expect the low on 628 to be revisited to complete the incomplete low? My answer, there's another good low or poor low, right? ABCD 34.32. My answer would be yes, but you got to get closer to it. You can't start selling it up here. It's too far away.
Annotate.
Here's another thing I'm going to add to profiling and just chart reading in general.
There we go.
Do you guys still hear me?
Yep.
All right. So one thing about reading a chart in general is, did you turn the page to a new chapter or even change to a new book? So the reason why we had this big jump from Friday to Monday was they absorbed what happened over the weekend, right? The driver, which is US China, actually created optimism, and they repriced this thing up above 55. Let me take the controls.
I wanted to shut my trade the news off, but
That's all right. Let me take, because I want to show something on my screen anyways.
hang on.
I got it. So let me just get rid of this. You guys should be sharing. You guys see my screen?
There we go. All right, so you took it over. Cool.
Yeah. You guys should be seeing my screen, right?
Yep.
All right. So the important thing is when you look at this and you look at a poor low, let's just say,
What are you looking at?
the chart. Forget about a low. I'm just looking at 628's
Okay.
got a poor low, right? In fact, let's do this way. Hold on a second.
What was the question about 628? What are the odds we retrace to it? Is that
Not
what
of
you
the
asked?
odds. You expect 628 to be revisited. But hold on. Let me explain something first. Where the hell is this thing at? Here it is. Whiteboard. I want to go to a whiteboard. You guys should be seeing a white screen. All right. Now I can draw on here. You guys have a poor low from 628, right? And that's Friday. The problem with worrying about whether or not that low is going to get revisited and the probabilities of being a magnet and all that other stuff is that you turn the page to a new chapter. When you have a gap open higher,
Right.
you all of a sudden are starting to trade the information differently or use the word reprice. So now the market is doing what it's doing to create value in this new chapter. So to me, we left this behind, and it only becomes important or probable or a magnet if you go back closer to it. And I don't think in the 60s you could play it from the short side forever because it's going to go back to 35, whatever that low was, that poor low. Too far away, and there's been a gap, a literal gap open higher, but almost like think of it as a river between what was going on in that scenario, in that environment, and what's going on in here. There's been a river, and that river was the other side of the U.S.-China trade deal. This was the uncertainty. We think we could get, something going. They're going to renegotiate. They're going to get back to they are doing it, and the market accepted to higher prices, and now they're figuring it out up there. Different area, different story, and to me, shoot, I'm drawing. You guys don't see anything. You guys will see it now.
Okay.
I'm not going to go through that whole thing.
Yeah, like Picasso
like
with
that.
no picture.
No picture. I'm painting. You guys can see the whiteboard now, though, right?
Yep.
All right. So poor low is down in here, but that's chapter 6. All of a sudden, a river. On the other side of the river, you got the next chapter, and that's where we're at now. 55 even up to 82 has been the jump. New information, new news. This is where we were, 628. Yeah, it's a poor low, but I think you got to get on the other side of the river before you start saying, okay, that's a magnet. You got to get closer to it. I don't mean right on top of it. I mean, you have to start getting into that session's range and things like that. So you got to know, to me, you always got to know the separation between when something changed. And the best word that helped me a long time ago to understand this was reprice. It's just a reprice session. It's repricing in something you didn't know the prior day, right? And generally, it's a volatile day or a gap open higher or lower. It's pricing in new information. And that's the best way I would describe going back down to the June 28th lows. Because I got news for you, Mike. It's a good question. Yeah, at some point, we're going to go test those lows. So a profiler could say, yeah, we're going to test them. And in 6 months, they test them, and he says, see, I told you, we rallied 100 points before we went down. Yeah, eventually we're going to test June 28th low? It's just.
It's a great question, because what Jim Dalton will tell you is, like, back in his early days, he would see a poor low and he would try to trade that thing to get it, to have it taken out, and lose a lot of money trying. A lot. Like, he told us a story. He lost $250,000 trying to get a poor low to be taken out. You see what I'm saying?
Mm-hmm.
Like, we get these incomplete auctions in our mind and think, oh yeah, we're going to go down and clean it up. And then, it doesn't happen, and you keep trying to trade that idea and it's stuck in your head. Well, no, get it out of your head. All it is an incomplete auction. It doesn't necessarily mean we're going to take it out today or tomorrow. But at some point, the odds are we're going to take it out. And so you got to use other things. And like Anthony points out, which is perfect, is like, yeah, when you start to get closer to it, the odds are we're going to take it out. But let's just look at today. I mean, if you give me the screen back, we have a poor low from yesterday. Okay, we went down within, 2 points, and we didn't take it out. So now what? If you want to talk about like how to trade against profile, everyone's looking for the poor low to be taken out. It doesn't, it presses, and now they're all stuck short. And we get this bounce, right?
You can share the screen. You got access to do it.
Share it. What is it? Screen number 3. So you could see the poor low at 55. We come down.
Wait. I don't see it yet.
Okay, hold on. Share.
There you go. It's loading.
Right.
There you go. We got it.
I'm going to use the drawing tools. I'm going to get good at this.
All
right. So basically, here's your poor low right here. Here's the low of day right there. We come down. We don't take out the poor low. What happens? Whammo. Everyone's still looking for this 56 to get taken out. So the point, I think the question that was asked is like, well, when we're going to take out the 28th poor low over here? You don't know.
Mm-hmm.
Wait till we get there. Wait till, you start to see something happening. It's dangerous. It's like, all it is just one thing. It's just auction market theory, excess and balance. Those are the 2 most important concepts that Dalton talks about. Excess is when you have single prints, so that's a good high. Chances are, we're rejecting this area, and you got this poor low here. At some point, we're going to take it out. But you got to use your setups, your pullbacks, to get this trade, to see this taken out. Like, don't just be like stuck on the idea that we have to take it out right now, because that's where people get killed.
All right, sounds good.
I don't know. That's just my 2 cents on it. Yeah.
Mark's going to be in the room daily to talk about some pre-market stuff. Mark, this was great. Thank you.
It's a start.
Yeah.
And I'm not trying to convert people into profile, by the way.
No, nobody is.
I'm just saying, pointing it out as you can use these balance areas as support and resistance levels to frame a pretty good bias, where price is in relation to them, to come up with your ideas in the morning. Right. That's all. All these other nuances, poor lows, poor highs, whatever, you can use that as you will. But the most important thing is the excess and the balance. And I form these balance areas using multiple days of overlap. And if we're holding above, that's bullish. If we're holding below, that's bearish. If we're within it, we're just going to balance. And that's that.
Sounds good. Glavis, take a look at your chat.
All right, buddy.
And then, Mark, thanks again.
Thank you.
Great stuff. We'll see everybody in the trading room tomorrow. Like I said, around 8:15 Central, he'll come in and do these profile previews for 5 minutes or so, or, what's going on. in the overnight session, previous sessions, some things that we talked about today. And we'll keep working towards popular profile setups when we got them stuck. Take care, guys. We'll see you next week or tomorrow.
Take care. Stop.
I can't figure out how to end the session now. Hold on, Mark. Don't do anything. When someone else shares, it throws everything off here. We'll go here. Now we got it. All right, guys. Take care. Thanks again, Mark.